Would you like to learn how Jeff Bezos paid $46 million for a wedding without paying taxes? Now, it's not about tax evasion, it's about tax avoidance, using legal strategies to reduce your tax liability while still building wealth. And there are 4 specific strategies that the ultra-rich use to avoid paying taxes. And today we're going to break them down step by step. First, let's talk about the biggest tax-saving strategy used by the world's wealthiest people. It's called the $1 salary strategy. If you take a look at the compensation of the ultra-rich, you'll notice one very interesting trend. They do not take a large salary from their businesses. In fact, some only take a $1 salary per year. Now, it might sound crazy, but here's how it works. Let's take Steve Jobs, Mark Zuckerberg, and Jeff Bezos for example. In this article by QuarryHillAdvisors.com, Steve Jobs, Mark Zuckerberg, and many others only took a $1 salary per year, while Jeff Bezos had the grandiose salary of $80,000 per year. They do this because earned income is taxed at a higher rate than capital gains. And according to this article by ProPublica.org, where they state where they obtained some of the tax records of the richest people in the US, including Jeff Bezos and Elon Musk. In 2007, Jeff Bezos, then a multi-billionaire and the world's richest man, did not pay a penny in federal income tax. He achieved this feat again in 2011. And in 2018, Tesla founder Elon Musk, the second richest person in the world, also paid no federal income tax. So instead of receiving a salary that is taxed immediately, the bulk of their compensation comes in the form of stock options. Why does this matter? Because stock options are not taxed until they are sold. So instead of receiving a paycheck where you get taxed immediately, their wealth can grow tax deferred through company stock. And as long as they don't sell their shares, no taxes are due. And this isn't just an isolated case. Plenty of other billionaires employ the same strategy with their stock-based compensation plan, where they take a minimal salary and they use the value of their shares of their company stock to build their wealth. Now, the key is stock isn't taxed when it's earned. It's taxed when it's sold. These billionaires are deferring their tax liability for as long as possible by holding onto their company stock. Now, you might be thinking, well, what happens when one of these billionaires needs to access some cash? Well, I'll tell you what they don't do. They don't go withdrawing money out of their stock portfolio because that would create a massive tax bill. Instead, they borrow against it. Introducing the borrowing strategy. Borrowing against stock is one of the most hush-hush ways the world's wealthiest avoid paying taxes. And according to nerdwallet.com, a loan isn't considered income. Therefore, you usually don't have to pay taxes on it. Now think of it like this. The last time you borrowed money out to pay for a car, maybe pay for college, maybe buy a house, or even start a business, did you have to pay taxes on that money? No, because it was a loan. So look at it from this perspective. In 2021, Jeff Bezos paid an estimated $0 in federal income taxes despite being the world's richest man. How? How did he get access to money? By borrowing against his Amazon stock. Is it starting to click? So here's how it works. Instead of selling the stock to fund his lifestyle, Bezos can take out a loan against the stock using the stock as collateral. And given that loans are not considered taxable, this allows him the ability to access large sums of cash, such as $46 million for a wedding, without triggering a taxable event. Pretty cool, huh? But there are risks. Borrowing against stock isn't free. If the value of the stock were to go down, the lender could require more collateral or even recall the loan. But as long as the value continues to go up, the wealthy can continue to do this dance and borrow against it without paying taxes. Now you may be thinking, I get it. Rich people don't pay any taxes. Is there a way I can do this too? And there are. Now, while you may not be able to choose to get paid in company stock or have amassed a large enough stock portfolio to be able to borrow against it, the next 2 strategies people of any income level can take advantage of. And the first one is real estate. Just like stock, real estate can also be used to avoid paying taxes. And here's how it works. Let's say you buy a piece of rental property and over time, the value of that property increases. Instead of you selling it and paying capital gains taxes on it, you can simply borrow against the equity of the property. And just like stock, loans against property are not considered taxable income. ProPublica.org tells us that American billionaires derive their wealth from the skyrocketing value of their assets, like stock and property. This is where the buy, borrow, die strategy comes in. Wealthy individuals often buy real estate, borrow against it, and then pass the property on to their heirs when they die. Their heirs receive the property with a stepped-up basis, meaning the value of the property is reset to the market value at time of inheritance. This helps the heirs avoid paying taxes on the appreciation. The rich know that leveraging real estate is a great way to build wealth without triggering a taxable event, especially if that property's value continues to appreciate. And the last powerful strategy that the wealthy use to create tax-free income that you can use too is cash value life insurance. Specifically, IULs or whole life policies, which are special kinds of permanent life insurance that build up a cash value inside of it. Now, this cash value grows tax deferred, but the cool thing is you can actually access this cash value in the future without creating a taxable event by borrowing against it. Sound familiar? So instead of paying taxes on your gains, you can access your policy's cash value tax-free through policy loans. You might have seen this viral video on social media about Waka Flocka putting millions of dollars into his life insurance policy.
I was like the dumbest person ever. I used to just spend money on everything. Man, please. Yeah. Please. I'm going to open up an insurance, put $2-3 million in my insurance and borrow from that and put it back in.
And if you take a look at this proxy statement from General Electric, you'll see that CEOs and high-level executive leadership do it too. And there are 3 tax codes, if followed, allow life insurance and the money inside to remain tax-free. Tax code 72E allows your money to grow tax-free. Tax code 7702A allows access to your cash value tax-free. And tax code 101A allows your money to pass on to your beneficiaries 100% tax-free. Think of it like this. When you borrow money from the cash value of your life insurance policy, it's not considered income. Therefore, the IRS doesn't tax it. This is just another way the ultra-rich use loans to access their money without creating a taxable event, just like everything else we've been talking about. So what can we learn from all this? The world's wealthiest people have learned how to avoid paying taxes on their money by borrowing against it. Whether that's borrowing money from their stock portfolio, from their real estate, or from their life insurance policy, they're avoiding paying taxes that the rest of us have to face. And these strategies aren't just for billionaires. With the right financial team and the right planning, anybody can learn how to build wealth while legally avoiding paying taxes. Now, if you want to learn more about how to do this, I've linked 2 videos here that will dive deeper into how this works. Make sure you subscribe so you don't miss another video teaching you a wealth hack when it comes to your money, and I will catch you back here next week on YouTube.